All right, well, we'll get going. Sorry for the delay in getting the coffee down here. That was quite an emergency this morning. Um, Welcome to the 61st Annual Joint Water Convention. I'm Jack Dwyer, the Executive Secretary at the North Dakota Water Resource Districts Association. Before we get started, I want to mention that if you need to receive credit for today's training, if you're a water manager, um, I left the certificates over here by the coffee, and fill those out, get those back to us, and um, we can always email those out if you need a copy of it. First of all, I'd like to thank our sponsors this year. We have our water champions, AE2S, Houston Engineering, More Engineering, our water partners, Apex Engineering, Bar Engineering, Portland and West, the Bismarck Mandan Convention and Visitors Bureau, the Devil's Lake Basin Joint Water Resource Board, Onstead Twitchell, and Vogel Law Firm. Our water supporters, Egg Country Farm Credit, Dakota Supply Group, Dwyer Law Office, HDR, Minnesota Valley Irrigation Bismarck, Montana Dakota Utilities Company, North Dakota Rural Water Systems Association, and the North Dakota Soybean Growers Association. Um, our first presenters, and just we've added everyone's bios, our presenters' bios, to the agenda that I handed out this morning. So rather than take the time of reading those out loud, I would direct your attention to those agendas for the bios. Our first presenters are from Bell Bank to give us an update on financial resources for water resource districts. Please welcome the Bell Bank team up to the front, Rebecca and Nathan.
All right. Good morning, everybody. Thank you, Jack. Give me a half a beat while I get a little situated, make sure I'm hitting the right buttons. So, as Jack mentioned, I'm Rebecca Borland from Bell Bank. I have Nathan Burseth, who will be helping do a little bit of the presentation as well today. And we're here to talk about financial resources for water resource districts. We're going to kind of break this presentation up into two parts, just to kind of keep it interesting. If we talked all about investment products for 45 minutes, you would all kind of fall back asleep. So we want that. So the first part we're going to talk about is just fraud, financial fraud in general, and where we're seeing these trends. Um, Here we can see, and hopefully you guys can see these screens okay, but this was a survey that was done talking about two businesses and organizations on who has actually had either attempted or actual payments fraud. And really what this is telling us is, yeah, we want to inherently think it's only large businesses that are experiencing this. 83% of businesses with over a billion in revenue are targeted, but also our smaller businesses are too. So what we're seeing over here is that revenue less than a billion, 74% of organizations are seeing attempted or actual fraud. So it's coming at everybody. Doesn't really matter your industry or the size of your organization. It's really an opportunistic type of crime. And there's a lot of different ways that payment fraud occurs. Probably the most common one is up at the top. This is 65% of payments fraud is um, done by an outside individual. So really frequently, that's by check forgery or check washing. That's a really common method. But you also see an outside individual even just trying to steal your credit card numbers, debit card numbers. So if you're using any of that at your water resource district, you may have experienced issues with that. Or them just trying to come in and pretend to be a vendor of yours. And they'll come in, pose as a vendor, say, hey, I've changed my bank account. Can you send your payment to this new bank account? It's a really common method as well. So again, 80% overall, 80% of organizations have either had in the last year, they've either had attempted or actual fraud. The most common way that this happens is check fraud. So I always talk with my organizations and clients that I work with, like as much as you can get away paying by check, that's really the best way to try to like minimize some of your risk because once that check leaves your office, it's out in the postal service. We don't know who's touching it. We don't know when it's received. Are they handling it responsibly or are they just leaving it on their office desk for a while before it gets deposited? So it's your bank account information that's out in the wild, and it's hard for you to protect it that way. So half of the organizations that have actually experienced fraud recover less than 50% of what was stolen from them. It's a huge amount of money that is taken. And once it is out of your bank account, it's really difficult to try to reclaim that. So one of the best things you can do is be proactive rather than reactive in this area. So, of those organizations that were surveyed last year that had actual payments fraud, or this is estimated and or attempted and actual. So, attempted 41% didn't actually have any loss. But those that were actually breached and had some losses, 25% lost $25,000. And then the next 25% is actually in these next three categories. So the next 25% of organizations lost somewhere between 25,000 and 250,000. And then you think back to the slide that we just had, only about 50% of that gets recovered. So it's a significant potential loss to your organization. Again, we want to talk about being really proactive and thoughtful on how you can prevent this from occurring rather than going into action mode after the fact. So, I'm going to talk about some different ways that this, like, really frequently payment fraud is targeted and occurs. There's a lot of information that I'll have on these screens, and I don't know if you guys probably can't all read it, anyways. And I'm not going to read through everything. So, if you want more of the details, then come and find me afterwards. Give me your email address. I don't mind emailing you out this presentation. It's going to be good information for you as water resource managers. And it's also going to be useful for the people in your offices. So, your office admin, your bookkeeper, your accountant, those people. And so, if you want this information afterwards so that you can share it with them, come and find me and I'll email it to you later. Okay. So, huge one. We've probably all heard about email compromise. Since email has been around, that is an area that's targeted. And a really common way that email is used is where a scammer or criminal would pretend to be maybe you as a manager. And they email your office admin and say, "Hey, I have this expenditure. I need it to go out. Can you go to the bank and do a wire transfer?" And these hackers can get into your email. They're very sophisticated nowadays. It's not Prince over in Africa who's trying to find his long lost nephew. That's not the case anymore. They are they are usually hacking into your email, watching. What's your normal writing style? Uh, what are the normal things that you do? And they mimic you. So they're very good about that. They'll come in and say, "Hey, send this payment out. It's kind of a rush. I need this payment to get out to this vendor or the supplier really quickly." And your office manager is just doing what they think needs to be done. They're trying to solve and and do what's asked of them. But if they wire those funds out, it's lost. If they're wiring it out to a scammer. So a really important thing that you can do is implement some kind of internal processes where, like, hey, just on your regular course of business, if you are emailing your office manager to ask them to make payments somewhere, get out of the habit of that and get into the habit of calling and requesting that over the phone. If you really are a person who wants to email, that's fine, but then tell your office manager you expect a call back and get into that habit so that you're verbally confirming this information instead of you really don't want to take any financial decisions based solely on an email because they are so susceptible to being spoofed, hacked, or intercepted. So ransomware infects a computer through malicious software, and it's most often going to get into your network by somebody clicking a link in an email or opening an attachment in an email. You can also, I think, with QR codes nowadays, those can also be utilized for some kind of malicious activity like this. And what ransomware is typically there's kind of two ways. The criminal will infect your network, and either they hold hold all your data, all your files on your network. They might like freeze your email, and they won't let you get into it, so you really can't do your business. Or they'll take all your data and publish it out in the dark web, and they hold it for ransom, and they say, "Hey, if you pay us $100,000, $500,000, whatever they see fit, we'll give you your information." Usually, if you get to that point, you have to get your insurance company involved, and the insurance company is typically negotiating with these criminals that have your data. So they're handling that negotiation piece for you. But you still have to deal with the fact that all your information is frozen and locked, and you really can't do your business until you get out of that mess. So, key thing on this for prevention is just to, again, be so thoughtful about emails that you're getting. Do you expect this email from to have a link? Does it make sense that this person emailed you an attachment? And then hopefully you're also have an IT company that you're working for that has some kind of filtration set up that will help filter your emails, and maybe even before you open an attachment will like look at it and make sure that it's not malicious. So check fraud is another, as we saw, that was about 65% of the actual payments fraud related to checks. There's a couple different ways that this can happen. Um, Most common is, well, one way that can happen is just washing a check. So that would be like you issue a legitimate check, drop it in the mail. Let's say you're paying um, you just have to pay your utility bill or something. You drop it in the mail. Somebody grabs that check and they wash the payee line off of it and put their own name on there. They can walk into a bank and cash that check. Um, the other way that check fraud happens is they get your routing number and account number off of your check. Those two things are printed on every single check, and they can just create their own checks on that look like yours, that mimic yours, uh, and they can just issue checks, as many as they want until they're caught. So I had an organization, a client that I worked with. This happened about 2 years ago. It's a client in Fargo, and they received a call on a Friday afternoon at like 4:30 where somebody out in, I think it was Iowa, called them and said, "We got this check from you. We were trying to sell this motorcycle through like Craigslist, I think. And the payment came from your business. And we were working with an individual. We thought this person was buying a motorcycle, but they sent a check from your business." And they were just saying, like, does this make sense? Is this legit? That's the first that my client had heard about this. And obviously, they did not write that check. They were not, this is a nonprofit. They were not buying a motorcycle from Iowa. That wasn't the case. And so obviously they said this isn't, they knew, my client knew something was up. And we kind of took some quick action to lock down their account, start monitoring every single payment check that is going through the account. And what we started to see was this trend where somehow a criminal had gotten their account number, created hundreds of checks, and mailed them throughout the United States. So this took, I think before, it took about 3 months before all of like we stopped hearing about fraudulent checks coming through and attempting. And so what the criminal had been doing is looking for anyone who was selling something on Craigslist, eBay, things like that, create this fake check. Let's say the product they were buying, the motorcycle, was being sold for $3,000. They would create a fake check for $6,000, mail it to this person, hoping, and then say, oh, we made a mistake. We put too much money on the check. We wrote it for too much. Can you deposit it? Send me back the difference, and I'll come and pick up the motorcycle next week. Right? And honestly, we said we don't know how many checks were received and just thrown away. But my client was getting calls for about 3 months. So a certain segment of the population receiving these checks, kind of their little red flags, alarm signals popped up, and they called the client to see if that these were legit. And a certain segment of people took those checks and deposited it and sent the money to the scammers. And the really unfortunate part about this is that those people who deposited the check and sent the money to the scammers, they're really out the money. So hopefully you as an organization, if you can catch this kind of fraud quick enough, you shouldn't be out. You have about 24-hour window to catch a fraudulent transaction in your account as a business and report it to your bank. If you can do that in that time frame, you shouldn't lose funds. But if you get beyond this 24-hour window, that's where potentially you won't be able to get it back, because who are you going to collect from? Are you going to collect from the scammer, or are you going to collect from the poor individual who deposited the check and sent half of the money away? There's just not always a resource to get those funds, and so you end up having a loss. So getting back to here, check fraud, kind of the proactive things you can do is like, anyway, if you can look at other payment methods that aren't checks, that's beneficial. Just sending out less checks means less people are touching your account numbers and having access to that. The other thing that you want to do is reconcile your bank account frequently, like daily, and make sure that you're catching any kind of fraud so that if it does happen, you can report it to your bank right away. Hopefully, don't have any kind of losses. It's hard. We all have a lot of things going every single day. So reconciling the bank account every single day doesn't make a lot of sense. But banks do have a product to help with that. So we'll talk about that a little later in the presentation. ACH fraud is a type of electronic payments fraud. So ACH is the service that you use just to like pay your employees by direct deposit, or if you've ever received direct deposits, that's running through ACH. So this is uh, really in order to debit your account. So think about your utility bill. If you've set that up for ACH or automatic debit, all they need to do is use your bank account and bank routing number, and they can pull money out of your account. So works really great when a reputable business is doing this. Um, it could definitely happen that a non-reputable business is doing this, or not a business, an individual or a criminal. And I'll tell you a story about a type of ACH fraud that happened with one. This wasn't a client of mine, but was in kind of one of my coworkers' clients that they worked with. They did not reconcile their bank accounts on a very frequent basis. They finally, I think, did like a 3 or 4 month reconciliation and noticed somebody had been paying their rent through the business's account. So what we saw was that, or what was discovered, is that this business had a cleaning, like a cleaning person come in. That cleaning person was able to, like, somebody at the business had just left their checkbook, the checkbook out on the table or their desk or something. And the cleaning staff were like, oh, great, routing number and account number. This is what I need. They went back home, went into their personal apartments like payment portal, and just plugged in this business's account number. And so for 3 months, the individual wasn't paying rent, the business was paying rent for them. And so that's a type of ACH fraud. Unfortunately, in that situation, because it was discovered so late, uh, I think maybe 1 month of rent was like able to be collected and recovered, but that's probably $3,000, maybe $4,000 that the business was out because they didn't discover this type of ACH fraud. Again, You want to look at reconciling your bank accounts pretty frequently, but if you can't do that, we'll talk about like the product that banks offer that can help with this and block unauthorized ACH debits. And then we have wire fraud. Um, this is also another type of electronic payments fraud. Wire fraud really comes down to like a wire transfer. So thinking back to earlier when I even talked about email and how criminals will sometimes pretend to be you to request like a payment going out. Oftentimes they're requesting a wire transfer because once a wire transfer leaves your bank account, there's not anything you can do to collect that back. So it's a way criminals really like to get your money because they think they can get it and waltz away with it quickly. But the other thing that they'll do is sometimes forge invoices. So let's say you do pay, you know, if you're paying a contractor, you've got drain projects and maybe you're making these payments by wire transfer to these contractors. One thing that criminals will do is they'll actually create like a false invoice with a new bank account information. And so they'll send you an invoice with a different bank account um, and you're paying this vendor like you typically would. You assume that you're paying them by wire transfer. You send it to the wrong bank account. And then occupational fraud. This is actually when somebody in your office is um, doing the fraud. So we love, we all want to trust the people that we work with. And this isn't about not trusting them, but occupational fraud most often occurs because the opportunity is there. It's very opportunistic. And if an individual is having a tough time in life financially, maybe they have some kind of addiction problems, or maybe they just want to keep up with the Joneses and they see that there's an easy way to get away with it, that's where you start seeing this happen. And, you can look at there's bribery, kickbacks, just taking cash. A huge one is falsified wages. And I think I don't know if you guys caught this, but in El Dorado, Emirado, which is a small town over by Grand Forks, the city auditor is um, being prosecuted now because she increased her wages like $90,000 over the 10 years that she worked there. She was just giving herself more pay than what she was authorized to have. Um, and there's things that you guys as managers, you do have to like think about that. And you have to think about like, well, how can you make it you don't even have to do anything super complicated, but you just need to check up on your office staff, the payments that they're doing. So periodically, your treasurer should be looking to see like, okay, do our payroll expenses match what we've authorized? Periodically, you want to look at your bank statements with the copies of the checks and deposits, even just to like look at it. Um, Sometimes just knowing a second person is reviewing the work makes it feel like they'll get caught and they won't try it. And again, it's not about saying, I don't trust you. It's about saying, like, let's put in some good practices so that there's never temptation. So, some of the other good practices that you can put in place to help keep things in line and to help protect yourself from any kind of payments fraud is implementing a policy of verifying payment instructions. And this is something you have to go back to your office and say, what is your process? Like, how do you verify when we've got a new vendor and how they want to get paid? And you also want to ask, like, okay, what about our existing vendors when they ask to get paid differently? If they've always received a check and now they're coming to you and asking to get an ACH or a wire transfer, what do you do? Ask your staff. They should be not reacting solely on an email or an invoice request. They should be picking up the phone, using a known phone number to call this vendor and verify that information. and just ask because it doesn't take a lot of time to put a procedure like that in place. But if you haven't talked about it, it's going to be one of those shortcut things that gets forgotten about, but it's really valuable. Um, if you can, depending on how many people are in your office, look at requiring dual control for any wire transfers or electronic payments. That's something at Bell Bank we can have hard coded into your banking system so that it requires two people from your office to be involved in any wire transfers or ACHs going out. And what that does is it makes sure that there's two people in the office making sure that any payment instruction changes were verified. And also, it's eliminating that temptation for an employee to think they could send money out without anyone else seeing. You want to have good email security and good IT security. So hopefully you all should have an IT company that you're working with. I assume that you do. And you want to just make sure that they're giving you some good education as well. So periodically listen to what they say about like what are the new trends in email. Um, make sure you're watching for any kind of like viruses that are coming in the system. Make sure that they're cleaning and scouring your system for that. And then you are in charge of how you behave on email. So you guys are kind of the first line of defense, making sure you're not clicking any suspicious links or opening those suspicious attachments. And make sure you're using good password security, which we hate them. They're kind of the devil. I recently went through all of my personal accounts and made sure I was using a different password for every single personal account that I had. And it took me 2 nights, 2 evenings to go through. I think that it was about 50 to 60 different accounts. It was a pain and it wasn't fun. But I used a password manager to help. And once I got it all set up, like the password manager is helping track that. So it's tedious. So as much as you can, use Touch ID or Face ID because that helps. So if you don't have any kind of password protection on your phone right now, that if you're using that phone to get into your work emails, water resource emails, your personal banking apps, any of that, it's susceptible. So you need some kind of protection on there. And I set up fingerprint access on my phone. It's very easy to use. So when you can implement that, do it, use the shortcut that's out there. And if you can't use fingerprint or Face ID, get comfortable with a password manager. They attach into browsers and will help automatically fill in those passwords. So ask your IT people to get you set up with that and get you comfortable using it. And then building in some of these internal controls that we've talked about, making sure that you know what kind of online access your employees have, making sure you are identifying any kind of like high risk processes like wire transfers. Those are generally high risk. Um, make sure that you have probably two people trained in on that process and maybe involved in that process as well. And lastly, if you don't have cyber insurance, every single organization needs it. I hope every one of you has it because I'm pretty sure the North Dakota Insurance Fund offers it. If you don't have it, you really need to have it because what that's going to do is if you get ransomware, they're going to step in and help you. If you do have a loss by some of those payment frauds that we talked about, you might need to do an insurance claim for it because if you lose $250,000 and you can't recollect it, you'll likely want to do an insurance claim. So review your coverage and make sure that you have that in place. Real quickly, I want to try to be sensitive for my time here. Positive Pay is a service that a lot of banks offer. Bell Banks offers this, and what this is it helps monitor your account every day for you, so that instead of you reconciling daily or your office staff reconciling daily, looking for fraudulent transactions, Positive Pay is actually doing that for you. It's a really valuable tool. It'll catch everything within that 24-hour time frame. And then actually working with your banker to understand the online banking tools that you do have in place. So that you can put in any kind of restrictions, good passwords, make and reporting that they have available. I'm going to take a little break before we shift off and talking some other more like granular financial information. I'll let Nathan or Seth come up here and give. Oh, okay.
Well, after that uplifting conversation, Rebecca said, I'm Nathan Burseth. First of all, I want to thank all of you for serving on Water Resource District boards. I know it's a highly paid, highly glorified job. My other hat I wear, I'm a county commissioner, so I appreciate what you guys do and all the headaches. Our county, we don't have an active water resource district because we don't have any water issues. So that's a joke. That's a joke. We have plenty. So uh, Barb will testify to that. I see he's in the audience. So anyway, we're gonna lighten up a little bit. I've got some wine, I've got some beer. I have some trivia time, so please jump up if you know the answers. On my hobby, I used to ref high school and college basketball, so I have a real interest in high school mascots throughout the state of North Dakota. So um, we'll see how many of you guys know some of these mascots, and some have gone by, some are still current. So raise your hand, and then afterwards you can pick out whatever you want. So who knows the mascot from Bow Bells, North Dakota? Yes. Yep, Eskimos. I think it's the only one. This probably the only one in the nation is the Eskimos. So you get a prize. And so I go for real odd ones. I go Elgin. Yep, the Flying Dutchman. But that close enough. So Elgin Flying Dutchman. Yep, exactly. Now this one I'll be interested to see the next two if you get. How about New City? You can use this in trivia at Christmas time. I'm pretty sure nobody will get it. They were the clams. I have no idea. Maybe Lake Ash, maybe the lake, and it resided there was clams. But I'd like to be the Fighting Clams as the basketball team. I can only imagine. So nobody got that one. And then we'll go north up along the Canadian border. How about Hannah? The Hannah Legionnaires. Yes. Yep. Exactly. The Hannah Legionnaires. I hope you guys are keeping track so you can come get your prizes. I'm going off the memory here. Okay. Bob Holmes can't answer this because he'd know one of the two of them. And Dwayne can't answer it because he'd know one of the two of them. Two schools, you can name two, there's probably more than two, and have the mascot of the Pirates. Hankinson is right? Yeah. Hankinson and Tioga and Rame. Yep, correct. Exactly. So Dwayne's originally from Underwood. I gave that. No, that's the next question. But Bob's from Tioga. So I just gave part of the question away for the next one, or answer away for the next one. So um, you got to name. I'll make it two, only two schools that have the mascot of the Rockets. Rutland's one. New Rockford Cheyenne. And Underwood were the Rockets. Um, and then I'm going to make him name, this will be a tougher one. Name three schools with Orioles. And I don't think any of them are. Yeah. What's the gap? What's the gap? How does it go? But what was their chant? Gackle like a rooster, gackle like a hen, gackle, gackle out of vin. It wasn't win, it's German, so it's vin. Gackle's one of them. Pheasant, the Pheasant and Orioles. Yes, yes, let's do that one. And there's another one. Hannaford, yes, good call. Hannaford. There's even another one. Upham, Clyde, who knows where Clyde, North Dakota is at? All right, way up in the north. A good friend of mine's from Clyde. So, um, and I think, let's see here. I'm trying to think of any others that I forgot. We got Bow Bells. We got Tower City Rockets. Let's see. Let's maybe make a real off one. Where's the horse harness racing capital in the United States? Close. Close to Hamilton. Yes, yes. Hamilton, North Dakota. Close to coming up. So I think I'll leave on that high note. I'll grab the gifts. I'll be in the back. Come up to me and pass them out. But again, thanks for your service.
This will be a real popularity contest because those of you who win, you get to pick up prizes, wine and beer and stuff. Those of you who want to take presentation slides back to your office will come and see me. So, you guys better. Right, so we're gonna shift here. We thought it was a nice little break, get everyone wide awake again. We're going to talk more now. This is getting back into more of the financial aspects and what's available for you as water resource districts. The first thing that I want to talk about is kind of set the stage for just in general interest rate environments. Now, the interest rate environment in the United States is really set by the Federal Reserve. And if you are, it's been a hot topic over the last year and a half, so maybe you guys are familiar with this. The Federal Reserve has two main mandates. One is to keep inflation low, around 2%, and then they want to keep unemployment low, around 4%. And they use the interest rates in the interest rate environment, or they call it the Fed fund rate, to help manage both of those areas. So what they do is like inflation, that increases when there's a lot of spending, a lot of consumers and businesses are out there buying products, and it's increasing, it allows those prices of the products to increase. That's inflation. So when that's going up, what the Federal Reserve wants to do is make it more expensive to borrow. And the higher the interest rates are, the more expensive it is to borrow, the less businesses and people have to spend. And it brings that inflation rate back down to 2%, or it's what they're doing. They're trying to keep it at 2. And then the unemployment rate goes hand in hand with that. Obviously, the more that consumers and businesses are buying, the more product is being produced, the busier manufacturers are, they're hiring, and that's dropping the unemployment rate. But when those manufacturers slow down, they start producing less, they're going to lay off some staff. That kind of brings up the unemployment rate. That's a pretty rudimentary discussion of how the Federal Reserve kind of uses those two mandates. And so they're kind of balancing this line. They're always going to be a little off in one of these targets because inflation going up usually drops unemployment and vice versa. So I'm looking here at this chart, it goes back. This first chart looks at inflation from 2013 and to 2024, where we are. And this is just, you can see like where inflation was historically. This spike right in the middle here, that is 2020, 21, 22, where we had the huge pandemic, changed everything. And you saw a huge spike in inflation. If you remember at that time, interest rates were really low. So inflation went up. And now we're starting to see over the last year, the Federal Reserve has been increasing interest rates slowly. And you're seeing that inflation come down a little bit. And so they're sitting at about 2.5 right now. And then on the right side of the screen, this is unemployment. You really look at the upper light blue line is unemployment. This starts at 2008. Again, you're seeing that huge spike, 2020, 21, 22, and then it's starting to level off a little bit over here in 23 and 24. So at the beginning of 2024, the Federal Reserve had the Fed funds rate set at between 5.25 to 5.5. And projections or probabilities were that the market was expecting by the end of 2024. This is what people thought at the beginning of the year. They thought most people thought that we'd end between 3.5 or 3.75 for that Fed funds rate. And that is not the case because right now the Fed fund rate is at 4.5 to 4.75. That's where it's at. We have one more Fed meeting coming up here in December. Depending on what they do, they might bring that down. We'll see. That's the expectation, is that there will be a rate cut in December. However, you can see the expectations from the beginning of the year are really wrong because there's economic data coming out throughout the year that the Fed is analyzing to try to determine Should they be dropping this quickly or not dropping it quickly? And so here's a graph of what economists think will happen in 2025. I think we'll end the year at 375 to 4. So that would be 2 to 3 or 4 different rate cuts in 2025. Speaking towards saying economists think the interest rate environment is going to ease up and that rates are going to come down. But again, expectations don't always match reality. This is kind of a fun little graph that I have. This is inflation expectations. This is a survey that the University of Michigan has been doing for many, many years. They survey economists to say, what do you think is going to happen to inflation? And the orange line at the top is the 25% who think it's going to be the highest, where this is where they think it'll fall. The blue line at the very bottom is the 25% that think it's going to be down low. And you can see, like, historically, so it started in the 90s. Historically, these two lines have been fairly similar. Like, the gap between them has been really similar. We get out here to 2020, 21, 22, 23, and this just changes exponentially. That orange line is gaining a lot of distance between that lower blue line. And really, what that's saying is that economists are just uncertain. They don't know because we've had a couple years of a really unusual rate environment and economic environment that they can't really look back at historical activity and use it to project forward. There's a lot of uncertainty going forward here. One of the things that's been such an unusual, um, it's been really unusual for economists to deal with, for banks to deal with. Any of you, if you're getting any kind of personal loans, it's unusual to deal with as well, is just the general interest rate curve. So this graph here talks about US Treasuries and their yield curves. Typically, what you see, this pink line at the bottom, this is what US Treasuries were doing about 3 years ago. You'd see the short maturity US Treasuries were earning under just almost nothing. So 5 year US Treasury was earning just a little over 1%. And going out longer on the longer time horizon, you get compensated with a higher interest rate, usually. And so you'd see like the 10 year is coming up closer to a 2%. Longer you get up to 20 years was at 2%. But in the last couple of years, that light blue line is what it looked like a year ago. We have what's called an inverted yield curve, where those shorter US Treasuries were earning higher interest rates than the longer ones. It's not normal, it's very atypical. And then we see here in the blue, the darker blue line, that's currently what the US Treasury yield curve looks like today. So you're starting to see it level off a little bit. And at some point, the expectation is that that yield curve will flip, go back to the normal where short-term rates are low. This would be what you're earning on your investments and your deposit accounts. Short-term rates are low, long-term rates are high. So a really great thing for you guys in, I think it was 2023, the North Dakota Century Code was modified to identify and specifically state water resource districts could invest in a number of different types of investment vehicles. I think prior to that, it just wasn't really identified, and so you didn't have a lot of options. You probably spent a lot of time just keeping your money in regular bank accounts. So what it says is you are permitted to use bank CDs, savings deposits, or any other deposit account insured by the Federal Deposit Insurance Corporation. You are uh, allowed to use deposit accounts that are fully insured through that Federal Deposit Insurance Corporation and placed through a deposit placement service, which we'll talk about what a deposit placement service is. It's a really good thing to know. You can use US government bonds, bills, and notes. And you can use municipal securities as an investment. So this would be like a municipal security would be if a town is issuing a bond. Um, a city, a town, sometimes even like fire departments, different municipal utilities might issue bonds, and you can use those as part of your investment portfolio to gain a little better interest. And you are allowed to use certain types of commercial papers issued by US corporations. They have to have a really high credit rating and they have to mature in 270 days or less. I think that's a pretty slim likelihood any of you would have that in your investment portfolio, or maybe even want to put it in your investment portfolio. These first four bullets are really what you're going to want to focus on as far as when you're looking like how do you get a good rate of return on the money that you have on hand. And then this is just a simplified version of this. This is my little cheat sheet when I'm talking to water resource agencies or any other type of government account that I work with. They align with this. So your bank deposit accounts have to be covered by FDIC insurance. That is a $250,000 limit. So FDIC insurance will cover you up to $250,000 at each bank. If your checking account or savings account exceeds that, your bank has to pledge collateral. So it's basically saying like if the bank were to fail, this collateral is yours. And that collateral has to match what you can invest in. So it can be US Treasuries, municipal securities, things like that. Or your deposits can be placed through a depository service, which we'll talk about. And then this other side is just your investments. So as long as your investments are backed by the US government or essentially receiving taxpayer funds, so like your city, town, municipal bonds that you might invest in, they're receiving taxpayer funds. That's a good indication it's allowable for you to utilize in your investment. The big thing here, though, is that I would say you really need to work with an investment advisor that can give you good guidance on this. You want investment advisors that are really comfortable with your rules. You shouldn't have to know all of it. You need to know the basics and then rely on your investment advisors to give you a good placements. Hmm? Now, I will give you a caveat for individuals. Your $250,000 limit can be, there's some different limitations that go in place. So you can actually get more than $250,000 as an individual. But as an organization, a water resource district, or a business, it's $250,000 per bank. Yes. So, well, no, you don't. So if the question is like, what do you do if you have more than $250,000 in the bank account? And that is where one, either the bank needs to pledge some collateral to cover those deposits for you, or we can use this depository placement service. So if you've been involved in water resource districts for a long time, you might have, before these depository placement services came about, what was often happening is banks wouldn't want to pledge the collateral to cover that difference in your bank account. So let's say you had $1 million in your checking account or savings account there. They would say, "Ugh, we don't want to pledge collateral for that other $750,000 that isn't covered." So what they would do is basically tell you you have to go to another bank and open another account elsewhere. So you would go elsewhere, you'd have to open one bank account at Bank A, get $250,000 of coverage. You'd open another account at Bank B, another account at Bank C, and so on and so on. And you'd be left with managing all these bank accounts. What this depository placement service does is takes the place of that. So you get to have one main account with your main bank. And on the back side, this depository placement service is doing that for you. It's breaking it up into smaller increments, placing it on in other financial institutions to get FDIC coverage for you. So this is really the trend. This Amplify is the business that we work with at Bell Bank. We've been using it for over a decade now. They've been around for a long time, and it's really been kind of a wonderful thing for both of government accounts that we work with and for the banks, because we can really help nurture that relationship. And I think I need to wrap it up here, you guys. I'm gonna leave you with a real quick um, concept about when you're thinking about the cash that you have on hand, and you want to think about breaking it out between what you need in the first, like, what do you need to use for your day-to-day operating? What do you need within the next year for your larger projects? And what do you have that's excess that you don't think you'll touch for the next 12 months? When you're working in your operating cash, your short term, you want to think about things that are really liquid, like bank checking accounts, savings accounts, these ICS accounts or depository placement service, and maybe some short term US T bills. Your intermediate cash, these reserves that you need within the next year, you're going to be looking at using savings accounts, ICS, CDs, and some ladder bonds and T-bills. And then when you go out longer, you can work with your investment advisor about maybe pulling in some municipalities to gain a little bit more interest rate. Typically, when you remember to think about that yield curve, the longer you go out, typically getting rewarded for a little longer. I don't want to get too far in here. So ultimately, I'm going to leave you two with this, is that what you're really going to do is with all of the cash you have on hand, you're going to be looking at having kind of a commingled strategy with bank accounts and investment accounts. And one thing that we really have done at Bell Bank that we really like is that we have all of that under one wing so that we can communicate with each other to help you manage that and look at it holistically for you. So you don't have to be the experts picking out the best investments or knowing exactly, you know, where's the best place to put your short-term cash versus your long-term cash. We can help you design that together. So that's any any questions? I Jack's gonna get mad at me here because I'm gonna put him on schedule. But before I get off, does anybody have any questions or anything that we covered today that you want to talk about a little bit more? Okay. All right. Well, I'll just reiterate. If you want guys, see Nathan. If you like me better, you want to see the slides or talk more, I'll be in the booth as well. So come and see me. Okay.
All right. So, excuse me. So the next thing we're going to do is our years of service awards. I think what we'll do is we'll say the names. If you're here, please come to the front. And at the end, we'll give everybody a round of applause. So, um, first of all, we've got David Ashley with 20 years. Is Wade Bachmeyer here? Thanks, Dave. Glenn Haugen, Michael Tweed. So, Mike, and Don Erlocker. Okay. Moving on to the 25 years of service awards, we've got Robert Blake. Is Robert here? Arv Burby, Richland County. I saw him. Linda Hammond, Keith Houck, Harry Ketterling, Robert Rostad, Larry Tanky. So Larry. Dwayne Erlocker. Wayne. And Don Zimbelman. So we don't have any 30-year year of service awards, but we have a 35-year, a 45-year, and a 50-year. So first, so for 35 years, we have Kenneth Rice. Did I say that correctly? For 45 years, we've got Cliff Isendorf.
Thank you, sir.
And for 50 years, we have Ben Farnson. So if we could give our Year of Service Award winners a round of applause for their lengthy years of service. Our next presenter is Keith Pick, giving an overview of the North Dakota Insurance Reserve Fund. Is Keith here? Where's our presenter? All right, so we're gonna take a break now, and we're gonna try to find Keith. Maybe just be like center.
Yeah,
Gotcha. All right, so we're gonna switch around our presentations this morning, see if we can't track down Keith Peach in the meantime. So we're gonna have Lauren Horner and Tyler Spomer from the Department of Water Resources give us an update on the National Flood Insurance Program, Risk Map, and ND-RAM.
all right, sounds good. Thank you. Good morning, everybody. As Jack said, my name is Tyler Spomer. I am the National Flood Insurance Program Coordinator for the North Dakota Department of Water Resources. And we're going to be talking about the most exciting subject of the morning, the National Flood Insurance Program. Okay, just to get started, the National Flood Insurance Program, or the NFIP, is simply a voluntary program based upon a mutual agreement between the local community and the federal government. So in exchange for regulating a floodplain management ordinance or enforcing that ordinance, federally backed flood insurance is available to members of that community. And it's available to property owners throughout the community, not just property owners that are in the special flood hazard area. Okay, so when we talk about the National Flood Insurance Program, oftentimes you'll see these pictures or ways to kind of describe the program, either the umbrella or the three-legged stool. I realize these graphics aren't the largest, so it might be a little bit hard to see, but under the umbrella, under the know the risk is the floodplain management basics, that risk determination. The mitigate the risk is going to be your substantial improvement, substantial damage, oversight and compliance, pre and post event, and then regulations. That's going to be your local ordinance. And then uninsured risk is obviously insurance. Kind of the same thing with the three-legged stool. And we like to say that an effective program isn't able to operate in a community if one of the three legs of the stool is not operating correctly or appropriately. Okay, so FEMA administers the National Flood Insurance Program. Myself at the state, I kind of do that coordination of a administration between FEMA and the local communities. The local communities are the ones that are enforcing their local ordinance. I am a technical resource for the local communities, do a lot of coordination between FEMA and the local communities. How many of you are familiar with federal lingo and jargon? It gets very complicated sometimes trying to understand what FEMA is trying to convey. We try to break it down into local terminology, something that people would in North Dakota, rural parts of the US would understand. We try to make sure that the state perspective is conveyed to FEMA. Sometimes, especially FEMA headquarters views the flyover states as just that. We try to make sure that that North Dakota local perspective is communicated. We work directly with FEMA Region 8 out of Denver. They're really good to work with. We've had really good success in um, working with them for many years. So nothing but good things to say about them. So the NFIP is a voluntary program. Okay. There's currently in North Dakota, we have 339 participating communities in the NFIP. We just had a township on the eastern side of the state, I don't remember the name of it, just joined through probably about 6 months ago. So when it comes to participating in the program, you have to have zoning authority, okay? So it can be a city, county, or township. The process to join is relatively simple. There's a 1 or 2 page application. There's a resolution of intent, and then a floodplain management ordinance. The intent and the ordinance, I have template documents. If you're interested in joining, for communities, they can use that, plug in their information, their community name, designate their floodplain administrator, so on and so forth. We try to make it as easy as possible. And the advantage to the NFIP, again, I'm going to keep reinforcing this, but the NFIP is administered at the local level. Yes, it's a federal program, but what's being enforced is a local ordinance at the community. It's not a federal law that's being enforced, it's the local ordinance. So benefits of participation in the NFIP. So that enforcement of floodplain management regulations. When you get down to the heart and the core of the NFIP, it's a life safety program. It is meant to prevent people from getting killed or injured as a result of floods. Yes, our floods here in North Dakota are typically not those flash floods like we've seen with the hurricanes in Tennessee and the southeastern part of the United States, but still, it is a life safety program. That is the original intent of the program. When it comes to mitigation grants, including public assistance and individual assistance, participation in the NFIP, as we like to say, opens up the full suite of FEMA assistance, whether it's different types of grants or just disaster assistance following a disaster, which is a huge plus. We get large disasters impacting rural communities. Damages can be pretty severe, pretty hard on that community. If you're participating in the NFIP, it opens up a few more doors to help recover from that. Another advantage is flood insurance is available throughout that community. So I mentioned earlier, there's a lot of misconceptions. One of the myths of the NFIP is that flood insurance is only available in certain areas within the community, like you have to be in the floodplain. That's not correct. If your community participates in the NFIP, it doesn't matter where you're at within that community, flood insurance is available to you, federally backed through the NFIP. Flood damage is not covered by most homeowners insurance policies. If you're unsure, look at your insurance agent. They'll probably tell you, oh yeah, no, we don't cover flood damage. That's what the flood insurance, the NFIP, is meant for. Wasn't me. The advantage to federally backed flood insurance, there are private insurers that offer flood insurance. Um, I don't I don't have a ton of knowledge about what the specifics are when it comes to the private market. However, I've heard some stories that, a potential risk. Well, 2 winters ago, we had how many 101 inches of snow here in Bismarck? Statewide, there was snow pretty significant. It's possible that a private insurer could say the risk is too great. We're just going to cancel policies because we're going to. The risk is too great for us. That would be pretty hard pill to swallow if you had a policy with that company, you get that notice, and it's March 15th. What are you going to do? Federally backed flood insurance, so long as you're paying through the NFIP, so long as you're paying your premium, that will never happen. That'll never be something that can happen. It can't be canceled so long as you're paying the premium. So the mandatory purchase is only in the special flood hazard area. And I'll pull up a map here in just a second to show you what that is. But the mandatory purchase, if you have a federally backed mortgage, is only in the special flood hazard area. Now, some people see this as a negative. I see it as a positive. The reason why, if you do not participate in the NFIP, if there is a home in the special flood hazard area and someone is trying to purchase that home, if they have to get private insurance for that, it could be cost prohibitive. I don't know exactly how, like I said, private insurance, what the pricing would look like on that. If it's federally backed, hopefully it's gonna make that purchase available to a wider um, potential list of purchasers. And then the community rating system is another program, part of the National Flood Insurance Program. If communities choose to go above and beyond the minimum requirements, they can get discounts on their flood insurance policies within their community. I'm not going to lie to you, it's a lot of work, but the communities, we have 12 communities here in North Dakota that participate in the community rating system. Grand Forks, I think, is the highest rating. They are a class 5 community, so they get roughly a 25% discount on their flood insurance premiums for members of the community. So what are some of the responsibilities for a community that participates? They have to designate a local floodplain administrator. They have to pick someone within the community that's going to be the floodplain administrator, that's going to make sure the ordinance is updated, going to be reviewing permits, talk about adopt and enforce the local ordinance. Floodplain development permits, they have to be issued for projects development in the special flood hazard area. Now, one thing that I always try to emphasize, you can deny permits too. A lot of people feel like they have to approve it. You don't have to approve it. If the project that is being proposed isn't meeting the minimum requirements, you can deny the permit. Inspecting all development, you got to know what's going on within your community. So if you're the designated floodplain administrator, you need to make sure that you know where the development is occurring. And development doesn't necessarily have to just be the new housing development. It can be where there's just various construction projects. Maybe somebody's replacing a section of sidewalk in the community. If that's in a special flood hazard area, that requires a permit. Helping residents obtain information. They may have questions about what the regulations are. They may have questions about their flood insurance. Maybe they have a policy and they have a question about something, or maybe they filed a claim and there's something that they're just questioning. Maintaining records of floodplain development. So issuing those permits, making sure you're keeping copies of that information. If you deny a permit, again, you got to keep copies of that information. You got to be able to demonstrate why you denied that permit. And then assist in the preparation of flood maps. And Laura's going to talk about that more here in a couple minutes, but it's basically just being available to assist in the development of those maps. It's a process, and someone at the local community needs to be there to help relay that information. I realize this is very small print for a lot of you in the back of the room, but generally what this says, why should we regulate development in flood prone areas? Because it saves money. Structures built to meet or exceed NFIP minimum floodplain management standards incur 65% less flood damage. Pretty significant. Saving the nation 2.4 billion, 100 billion over the last 40 years, which is how long roughly the NFIP has been around. Mitigation saves. So riverine flood is kind of the top one here. So for every dollar that's spent, $7 is saved when it comes to mitigation. That's huge. So the development under the NFIP is a very broad term. It includes a lot. Any man-made change to improved or unimproved real estate. I'm not going to read everything. I think you guys are getting copies of these slides, is from what I understand. I guess maybe I will read it for those that are in the back. Including but not limited to buildings or other structures, mining, dredging, filling, paving, excavation, drilling, or storage of equipment or materials. That's a lot of stuff. Now, to put in a new mailbox, no, you don't need a permit for that. It doesn't meet the definition of development. But if you're gonna put up a shed, yeah, that's development. Got to have a permit. So projects meeting that definition then must be permitted by the community. So simply boring underneath a river for some sort of a, whether it's a gas line, whatever, that meets the or meets the definition of development under the NFIP. That has to be permitted. And not getting too complicated right now, but depending upon where the project is, it could require even additional permitting. Okay, so this is your flood insurance rate map. The high risk area, I'm going to try to point, I'm going to walk back and forth to each slide so you guys can see. So the high risk area is going to be this red and blue crosshatched area, and the blue is also high risk. The moderate risk area is going to be this, what they call the shaded zone X, with kind of the rusty colored area. The low risk is going to be the unshaded zone X. Okay, flood insurance is only required in the high risk areas for those properties with a federally backed loan. Okay, so again, the high risk area going to be the zone AE here. This is the floodway. That's what this delineation means. This red and blue crosshatched area, that's the floodway. The 100-year floodplain is the blue, and then the moderate risk area is the rust colored area. This is somewhere along the Mouse River. So zone AE is this area here. Zone A, which is still, it's not a detailed study area. This here is still part of the floodplain. It looks like it's a kind of a tributary coming down into the main creek or stream, excuse me. Unshaded zone X, so properties out here or over here, that's going to be your low risk. We like to say no area is no risk. There's always risk, no matter where you're at. It's just to different degrees. How am I doing on time? Am I doing good? Okay. All right. Okay. So the FEMA Township Study. Some of you may have heard of this. Some of you may have not. To make a long story short, there's been some questions about the county versus township relationship when it comes to floodplain management. And so FEMA began a study. We're going on 2 years ago when it all started. But trying to identify that township county zoning relationship and or MOU if one exists, and then to determine who has that zoning authority. They're under century code. There's a specific process. If a township wants to work with the county to township says, hey, I'm not interested in doing this, but we still want to participate. County, will you take over floodplain management zoning for us? There's a process in century code that specifies how that's supposed to be done. So the township study is just a snapshot in time. Okay. It's looking at what's going on right now. There's no method of tracking. So 5 years from now, the information from this is going to be outdated. Okay. It's not going to tell us 5 years from now, out in the middle of a county, who has the zoning authority, who is responsible for floodplain management zoning. So the North Dakota legislative study, Senate Bill 2365. This was in the 2023 legislative session. There was an interim Ag and Natural Resources Committee study that was conducted, and the purpose of the study was to identify a method for tracking and updating organized townships, and then a process to request or yield that authority to adjacent jurisdictions, excuse me, and then public access to that land use authority information. There is draft legislation. If you go out to the legislative council website, is that what they're called? You can look up the interim Ag and Natural Resources Committee, Senate Bill 2365, and you can view the draft legislation. I would encourage you to do that so that you know what's happening, what may happen in legislative session. It's just a draft bill. It'll go before the full legislature here in January. Not entirely certain where that's going to end up. Your guess is as good as mine, but it's important for you to know what is occurring at the state level that will or could impact you. That's my portion of the slide. I will be around throughout the conference and here later this morning. If you have questions for me, just track me down. I'm more than happy to help with whatever. My contact information is right here. You can also just send me an email. Be happy to help in whatever way I can. So I'll hand it off to Laura. Thank you.
All right. Now that Tyler has kind of set the stage, speaking of one of the legs of that stool, I like the stool analogy, so you'll see that pop up a couple more times throughout the slide deck. My name is Laura Horner. I am a certified floodplain manager with the Department of Water Resources. And as already kind of announced or introduced, I oversee the FEMA Risk Map program. My role in the state is to help articulate the areas of flood risk or the areas in the state that have overland flooding. And so a lot of this theme will just kind of be tied to the purpose and the role. The stool, know the risk. I think we maybe need to ask the question, do you believe North Dakota deals with the risk of flooding? Some people might not actually believe it. But if you were to ask our friends or partners over at the Department of Emergency Services, they would tell you that flood risk is the #1 rated from a Mother Nature standpoint in our state hazard mitigation report. It ranks right up there with cybersecurity. Some of the stats that they've provided me to help kind of paint the picture as to what level of risk we really do deal with. North Dakota is, from a population standpoint, North Dakota is the 47th ranked state in the nation when it comes to population. We have less than 780,000 people. We have no coastline, but yet since 2000, we have received $305 million in obligated fundings for public assistance related to flooding. I said 2000. Yeah, I said 2000. You don't even count some big floods that happened in the 90s. Those archives are lost in paper inventory and some finally got. I'm asking them. So our numbers are big. From the National Flood Insurance Program, Since they have begun to write policies in the state of North Dakota, there have been $260 million in payouts directly tied to the National Flood Insurance Program. We're a very low populated state with no coastline. We have a substantial risk of flooding. How do you know where it's going to flood? Know your risk. Well, FEMA tries to help with that. They do it in two ways. The first one is the FEMA regulatory products. The regulatory products is really what Tyler kind of called really with that zone designation. We call them the flood risk, flood risk, well, flood insurance rate maps. That acronym was not coming from the flood insurance rate maps. What these maps indicate is it indicates the 1% annual chance event and the 0.2. The area in the 1% annual chance events are the areas of mandatory purchase. The banks enforce the area of mandatory purchase. FEMA creates the risk information. The banking system, when it comes to a federally backed mortgage, is the ones that actually enforce that area of mandatory purchase. The banks want to make do and make sure that they don't lose the investment of their loans. They have to make sure that they can be made whole, regardless of a disaster hitting an area where they have a number of policies or loans issued for homeowners. And so it's very important to understand that distinction. Some of the other products that are deemed regulatory, the flood insurance rate maps, flood insurance studies, and the FIRM. So I'm going to start pulling it off the flood insurance rate map. The FIRM database is the digital products that you can then overlay into viewers. It is very important. How do you understand what your regulatory product is? Tyler talked about the idea of a participating community having an ordinance. The regulatory products that a community will reference is cited within that ordinance. It is cited by date, and it should always be tied to the regulatory actions of community development. These are sources of information for regulation and mitigation planning. So really the bread and butter of what the risk map program is. We do a lot of regulatory firm development. The category is actually really cool and a really kind of novel concept. FEMA recognizes that we're in a very data-rich area or environment right now. And so they are now starting to invest in products that are now regulatory in nature. It's kind of a catch-all. Non-regulatory products are meant to be used alongside those regulatory products to better inform and better help guide and support a community official's actions. The flood insurance program is a optional program, and it really does fall to those elected officials of a community to help steer and manage the program. Some of the products that are considered non-regulatory that we have started to produce, we being the state and my capacity at the Department of Water Resources, flood risk reports, flood risk studies and other watershed studies, topographic data. I love topo. Changes since last farm information, just trying to create products that help better show how risk has changed over time. They are not meant to be used for the basis of official action and requirements under the National Flood Insurance Program. They do not have a mandatory purchase for the National Flood Insurance Program and are not tied to a rating system for the purpose of insurance. And they do not create the minimum building standards for construction in a floodplain. The exception to that, we have considered there is a term out there considered best available data. And a community, through their ordinance, can choose to adopt a study that is more restrictive to regulate their floodplain too. It must show up in their regulatory ordinance, their program ordinance, if they want to cite a study to do. It is considered a higher standard. And Tyler spoke of the community rating system. It helps acquire points and some of the positive benefits to being a more strict floodplain management program. And it helps you with that rating process as well if you choose to go above and beyond. Right now are some of the pictures that are currently out there for the state's non-regulatory products. We do technical viewers, we have depth grids, topo, both for the purpose of LiDAR, aerial imagery, building footprints, and then some additional technical reports that have been completed. Right. I understand that this is kind of a map with pretty intense line work to walk or look at, but what this is the natural hydrography layer. medium resolution. And this is just a snapshot as to what the current state's regulatory products are. If you see the blue line mark, that is the area covered with a digital flood insurance rate map. Coming from the National Flood Hazard Plan. It's all available online if you're interested in going and get that data. We have a big state, ranked 17th in the nation, with a lot of water stream miles and very limited areas of information. We are continuing to chip away at portions of the state to try to make this map look a little better. Oh, I'm no longer advancing. Thank you. We'll see if it works or not. Under that non-regulatory category, I spoke of the fact that we have been busy doing topo. And we have. I love this map. This map makes me very, very happy because if I did anything for the state of North Dakota, I have leveraged funding available to me through the Risk Map program. It is a grant program. I write grants, and it is issued on an annual basis. But we have covered a lot of state in LiDAR acquisition. If you're not familiar with the state's dissemination website, the LiDAR dissemination website, it is found on our map service. Please go look at it because it's to be envied across the nation. And I hope people recognize this. Oh, little old North Dakota's doing big things. And we are. Anyway, state of North Dakota we started with a QL3, not a collect across the nation. Was involved in some of those earlier collects, but really we got going in QL2. We started in the east, worked our way west. We have full coverage of QL2 LiDAR, plus our top 25 population centers have QL1, the highest resolution that is currently out there for acquisition. And it is covering the top 25 city centers, so top 25 based off population, which means that 60% of our population have QL1 LiDAR available for them at their residence. It's a pretty big stat. I like that stat. We have also done other things as far as the topo based. We have building footprints acquired using both LiDAR and aerial imagery. We've done 2 collects of aerial imagery, 6-inch aerial imagery across the state. We have been involved in study work. USGS has a big study that we have invested funds through the Risk Map program to be proud of and have a voice from a national standpoint to say that North Dakota wants to review and be involved in the study work that's being completed by the national or by the USGS. We've done some analytics. We've done a lot of things. So I really do like non-regulatory because it's the biggest bang for your buck and I can have a widespread impact. I'm sorry, my clicker's not working. Thank you. Maybe it went. Another non-regulatory product is considered base level engineering. Base level engineering is an automated assessment of flood risk. It was completed in 2017 and 18. And we have a home for it now that I'll go over here shortly in a later slide. But base level engineering basically is a very approximated approach to doing widespread floodplain. What's really wonderful about this is it's continuous. It's not just a singular stream. It's basically a pluvial look at a flood event in the state of North Dakota. So it represents a June rainstorm. We simulated a rainstorm, we watched where the water ran. All that data is hosted on the state's website, NDRAM, I'll talk about that shortly. But this data set was done in partnership with the FEMA office, FEMA Region 8. North Dakota was they invested in our state because of our LiDAR acquisition that was available to us. North Dakota is the first state in the nation to have flood risk across all of its counties. All 53 of our counties and tribal nations have flood risk assessment information. So that's pretty cool. Some of the products that we got for the work maps, this is an example of a work map. Engineering data, GIS data, discovery and engineering, and ratings. I said this was done in 2017 and 18. There was an extensive outreach and validation process that went through with this data. FEMA 23 with federal partners, emergency management, and the Department of Water Resources, State Water Commission at the time, presented 429 maps across the state. We hosted 86 in-person meetings, and we presented these products and asked for comment. Some of you may have actually potentially been involved in that. It was expensive. It was the best kind of grants or everything we could have ever done. So we saw 500 residents in North Dakota and presented flood risk information for their particular area. we'll see if we have anything to rival this kind of outreach in the coming years. It was a big effort. I indicated that this data, FEMA then said, here you are, North Dakota, here's your base level engineering, go do great things. I didn't know why. But I did have an opportunity to say that, and we had a state engineer at the time that felt very strongly that it needed to be publicly available, which was awesome. His other instructions had to be user friendly. It's not an easy feat when you think of technical data sets being publicly put out there. With our IT staff, GIS staff in the state, we were able to come up with something that I think does a really fair job. It is called the North Dakota Risk Assessment Map Service, ndram.dwr.nd.gov. I have business cards if anyone's interested in looking at. Please otherwise flag me down. I'd be more than happy to kind of give up a but it is now the home of the state's base level engineering. It is also the home of our regulatory, anything that's digital. The regulatory products are also housed in this site. Sweet. This is kind of an example or a dashboard of the layout of the base level engineering data from the site as far as an interface. It gives multiple regression periods. You come over there and show you yours. Offers the depth information, and then also has the downloadable information all tied. There again, 2 active layers, regulatory from base level engineering. Some of the investment pieces. I come over here and use this screen for the purpose of so like I said, multiple regressions, base level engineering, regulatory information, gives some of the stats as far as the GIS locations, and then all the data information that could potentially support that particular search or query. The interface, at the time, it's actually kind of a data document, but represents $33 million of public investment between the latter and the FEMA investment, the federal investment that they put into the technical engineering. It is a huge data set. At the time that this draft or document was created, it says 40 or 47 terabytes. Probably double that now with our updated LiDAR. It's huge. We were able to host it publicly, and it is user friendly. My grandmother from Beersford, South Dakota, could look up my address in this and tell me that there was water in my street. I'm so glad you found it. Oh, really cool. She did it on her iPad too. So we accomplished something that actually made me know that we did something pretty cool. Here's some interfaces as far as examples. This is the concept of development. City of Beersford wants to develop in a new area, doing some preliminary assessments as to what they might have to work with. They have a mapped, detailed floodplain over here. And this arrow, this is a small screen. I can't use a laser pointer. This arrow is the area of interest that they're going to start looking at putting a new subdivision in. I'm over here. As far as they're concerned, and the FEMA products and all the engineering data they have, there's nothing for us now. Do what they'd like, do great things. Base level engineering information, once you turn that on, does actually indicate water that does in fact go through it. With the engineering data information, you can start to pull flow rates, start to better understand what they might have to do to manage or scale a system that helps with drainage in that particular area if they choose to pursue development. And so it's kind of that very first snapshot, base level concept as to an engineering firm saying, all right, we have a client that wants us to do a job. How do we start that conversation with them? What will the needs be? Here's a preliminary starting point to start that conversation with. Now, I'm going to go one further. I know in this group, you guys deal with more rural things, and it's we deal with a lot of communities that develop. The reality is, how many of you guys have dealt with a culvert that's blown or a bridge crossing that's been damaged? My hand's going up, you guys. Hopefully, just like yes, we deal with more of those things. Thank you. How many of you guys have worked with emergency management for the idea of replacement and disaster recovery? Yes. Put my hands back, you guys are playing my game. Anyway, for this group, FEMA has done preliminary engineering for the purpose of flow rates and sizing of those replacement structures, especially if you turn it back into FEMA for assistance. Start here. How many of you actually deal with emergency services in your area or know individuals that are impacted with the emergency services? Divide County uses this to understand when roads go under. And because of limited access up in those more rural areas, it helps them understand clear paths when high water events take place in their county. There are lots and lots of utility just with the understanding of knowing when roads go under, what size event, and what are maybe the areas of greatest concern when you have monies available to you, what areas you should target that help either for the purpose of access or just bang for your buck. So those are two other cool things that I hope people understand that this data can. All right, manage the risk. I get two legs. Tyler only got one. I like to talk to all three. We have our partners over at DES, Department of Emergency Services. They are the real guys when it comes to the grant programs and how mitigation works and what projects could potentially be a good mitigation grant application. I do like happy stories and I like to be full circle. Manage the risk. Risk and management, like there are so many ways that we can manage the risk. North Dakota, we are killer at making structural features that manage a risk. We do such a good job when it comes to a structural approach to management. But the reality is there's also a natural approach. FEMA is now taking a harder look at what natural approaches there might be. There are other ways that you can also manage risk more locally, whether elevation is an option, elevating a structure higher, um, acquisition relocation, physically moving a property to a safer location, and then also the idea of insurance. Maybe insurance and insuring against the risk really is the best path forward. They're all mitigation type actions that a community or an individual can choose to take if it fits their, um, gives them the peace of mind to be able to move forward. I told you I like happy stories. This is South Bismarck. For those individuals who are not aware as to City of Bismarck's layout, we are very top end of the screen, expressway, airport road. Airport would be down in here. It's extreme corner. And this is water drainage ditch. It conveys a lot of the water that comes from the interior side of the city out to the river, out to the Missouri River. In 2018, these civil engineering models and maps were released for the city of Bismarck. And they're like, "Hmm, I can't tell if you guys can see all this blue area. But those conversations started. This is a risk area that we've not seen on the previous one. And so hopefully conversations with the city, just realizing that there was a level of risk within that project, scoping with the city of Bismarck as to what a new risk project could look like. We went through the process of making new files, updating them. We released June 5th of 2025. The detailed engineering study identifies this area that's low lying and a breakup from the water drainage ditch. That is in fact in a 1% annual chance event. City of Bismarck did exactly what they needed to do. They got proactive. Oh, please do that. Sure. They got proactive. They went to their friends over at DES and they started applying for mitigation grant programs. They ended up receiving a grant program. They got a flood hazard mitigation grant. The cap for that grant is $50 million. They got all $50 million to support some kind of mitigation project to address the need for flood control on the south side of Bismarck. Wow, things are kind of acting a little funky. Here's the news release, or the news release was the first thing that flashed. Here is the video that supports that FYI ran locally. This is what's going on. Anyway, and then here's a social media post of the city, state, and federal partners all getting together to celebrate the fact that a $50 million grant came through for the city of Bismarck. I love happy stories. So now they have a starting point. The federal program with all three legs of the stool started to come together to help manage risk. What's next? So I am still proactively looking to do flood risk management in the state. I actually skipped a screen in that little debacle with it not moving, but we have 24 active risk map projects taking place across the counties and the Devil's Lake Basin. I'm going to say that again, 24 counties. with ongoing risk projects here in the state of North Dakota. Say that properly. There are some more grouped. Anyway, so we are still proactively working on the digital or making sure that the flood insurance rate map products are still being moved ahead. But really putting a lot of effort into making sure that our base level base engineering stays relevant, stays current, continues to be a resource for those areas that otherwise don't have regular firm information. And so FEMA has started to do, well, FEMA has issued us funding as a state to start doing maintenance efforts, base level engineering. And so we are starting basically the east side of the state and we'll work our way west. It's just all this graphic is meant to indicate that those various little work areas are where we're starting some of that development, that maintenance effort. With that, I'm going to invite Tyler back up here. I think he made himself comfortable in the back. He did. Looking ahead, this is just a general idea of what is currently going on and things that we as a state are kind of keeping an eye on. I'm going to let Tyler start.
Thank you, Ron. Sorry if that got loud. Okay, so online quoting, there's a new product FEMA introduced, direct to consumer. I haven't clicked it. You should be able to Google FEMA flood insurance direct to consumer, and you can come up with, you can do an online quote. So you can go out, plug in your information, and it will give you a quote for what your insurance, flood insurance would be, which is brand new. This has just been released within the last few weeks. Another option that is coming out is an installment payment plan. This, again, was also just released within the last few weeks. Prior to this, if you wanted NFIP flood insurance, you had to pay the entire premium up front. So before you even, yeah, in order to buy the policy, you had to pay it up front. Sorry, I don't know what I was trying to say there. Now you can pay it in installments throughout the year, which is a huge change. A change that changes 40 years. I mean, NFIP has been around a long time. It's always been pay up front. Now it's the option to do the installment payment plan. Housing and urban development, the new HUD rule. Without getting super complicated, the HUD new rule basically states new construction in a special flood hazard area. Trying to remember all of the specific caveats to this one. New construction in a special flood hazard area, 2 feet of freeboard are required if it's a federally backed mortgage. Now, this is not something that FEMA says is a change to their minimum requirements. However, if a community doesn't increase their freeboard, so when it comes to elevating property, right? FEMA says it has to be at base flood elevation or above. State adds 1 foot to that, so it's BFE plus 1 foot. Okay, what this is stating is that it should be BFE plus 2 feet. Now, again, this is not a change in the FEMA minimum requirements, but this could potentially exclude FHA loans for new construction in a special flood hazard area if the community chooses not to increase their freeboard to 2 feet. So it's very kind of specific circumstances that have to align where this could exclude someone, but I would certainly do your research if this is something that you're aware of or that you want more information on. Do your research. There's a lot of information out on the web on this new rule. And then this is yours, FFRD. All right, back to Laura.
Thanks. Nice transition, Tyler. Future flood risk data, FFRD. We acronyms, and this is one that's fun to roll off the tongue. FFRD. All right. FFRD. So the National Flood Insurance Program, especially in the idea of map making and articulating risks, has been around for a long time. They've been making maps. We are now looking at a different way, a more modernized way to make mapping products. Right now, we use paper. We use a line on a map. What they're doing is they're looking at a graduated or moving the program to a more graduated risk assessment. And this is going to apply with how they try to map and articulate risk, and it's going to be more of a structural based type of approach. They are also looking as to really kind of getting away from the paper maps and going more digital. So that's a huge move. We have been working on paper maps for a long time, and we are clearly past that point just with our technology capabilities. Finally, the last one is back to Tyler, but we're really looking at the National Flood Insurance Program reauthorization at the moment. That has been something for a long time in coming. And do you know the date on that?
So right now, Congress likes to kick the can, right? When it comes to continuing resolutions and passing a budget and all this. Well, the same thing holds true for the National Flood Insurance Program and a reauthorization. They keep kicking the can further down the road. Um, I'm, I'm sure they'll probably kick the can again. Um, who knows what's going to happen with a new administration? Um, do your research if you're interested in what's going on with it. Information is out there on the FEMA website and or other sources. Um, I can't imagine that it wouldn't be reauthorized, but it does kind of get a little hairy when you get down to just a couple days left. And so yeah, it's who knows what will happen next. Yes, something to keep an eye on for sure. Thank you for allowing us to be up here to present. I appreciate everybody paying attention. Again, we'll be around for questions. More than happy to assist in any way we can. Laura?
I'm not sure exactly what we did from time standpoint, but if there are any questions that we have time for, Tyler and I are happy to address them. Otherwise, like I said, stop by the Department of Water Resources booth upstairs, and you might stop across some of the partners. Maybe there's some today. Very good. If you have any additional questions, that's where you can find us and some of the information regarding the material we talked about. All right, thank you. Sorry, Mr. Walker. I'll let you take them, 'cause I don't work.
No, just I appreciate that you did bring up reauthorization because earlier in the presentation you made the comment that your policy can't be canceled. And I think people need to know that the one threat to your policy is if Congress does not reauthorize the NFIP program. So thank you for that information.
Any other comments or questions before we let you guys talk about it? All right, thank you all.
My final presenter is Keith Peach. Um, just want to explain that the scheduling mishap was my fault. I found out, so got to take the blame. Yep. Keith Peach is the CEO of the North Dakota Insurance Reserve Fund.
All right. Well, good morning, everybody. It's always good to get, just cordialness. So I am the CEO of the North Dakota Insurance Reserve Fund. We provide insurance coverage for political subdivisions is essentially the make or break of it. I joined NDIRF in 2012 as an outside claims adjuster, and then just advanced through various leadership roles throughout the years until being appointed the CEO in July of this year. I'm a veteran of the North Dakota Army National Guard with 2 deployments, one to Iraq in 2008 and one to Afghanistan in 2014. A lot of the leadership experience that I bring over comes from the Army side as a obviously a big influence on my life. In terms of my education, I have a degree from North Dakota State, and then a master's degree from Florida State University in risk management and insurance. Before we get into really why the group was created, we have to understand public entity pooling and what that actually means. Now, a risk pool is basically a group of entities pooling their money together to share the risk and exposures that everybody has across the board for their operations. And it's important to note that risk pools are not insurance. It is a form of risk financing to help make sure that those risks and losses are covered and spread across. It's very similar to insurance, operates very similar to what a mutual insurer does in terms of giving back the money back to the membership if more contributions are collected than what are paid out in losses and operational expenses. And it's one of the biggest benefits of it is the members are the actual owners of that organization. So the NADERF is set up as a nonprofit corporation, member owned. The board of directors, which I'll get into in a little bit here, comes from the membership by the bylaws and the election that we do. If you didn't operate within a pool or weren't a member of the pool, what are the other options? Well, you could self-insure, which basically means you set up a program internally. You set aside funds to pay for losses. You have somebody administratively handling it. You follow the regulations that go with self-insurance. The other option is just going through the private commercial market. And that's, if that's finding coverage through a big company like Acuity or using a managing general agent to place coverage through various holding corporations, reinsurers, all of that. Those are the options that are really open for the public sector or for the political subs in North Dakota. Now, on the commercial side, what has been shown, and part of the reason why risk pools exist is, throughout the 1970s, there was an erosion of sovereign immunity, whereas before it was essentially the government can't be sued. And that included the state side, that included the political subs. It goes way back in time to, the King of England basically saying, you can't sue us. It'll really be a detriment to the development of our country and, how that all played out there. But eventually, North Dakota, it went back and forth over the course of since the inception of North Dakota in terms of whether or not state and local governments could be sued. And eventually in the 1970s, there was a court case, Keto versus the Minot Park District, which basically is what we operate under now in terms of the risk environment for political subs and the state. So after that erosion of sovereign immunity, the public entities had to go out there and say, okay, how do we manage this risk? If we're sued for, X, Y, or Z, how do we respond to that? Commercial insurance was the initial answer to that. And across the country, there was risk pools being formed and developed and done that way. And that was a portion of it where risk pools came along. But for the most part, in North Dakota, it was the commercial insurance side. Well, until we got into the 1980s, where if you look at just basically a breakdown in the insurance industry in general due to investment losses that were happening, the plaintiff bar became very sophisticated, and there was this crisis that happened in the 80s, which resulted in commercial insurers pulling out of North Dakota and leaving the political subdivisions without coverage. And this truly speaks to the testament of North Dakotans and the resiliency is the entities started banding together and saying, okay, how can we do this? They eventually formed the North Dakota Insurance Reserve Fund in 1986 and finally incorporated in 1989 after the Century Code was codified to allow for government risk pools as we currently exist now. So in 1986, everybody got together and said, hey, we can do this, we can put this together. 1989, we were able to form as a nonprofit corporation. And by that point, we had, 1990, we reached 1,000 members. 2003, we had 2,000 members. And now today we have 2,600 members. So over time, the North Dakota Insurance Reserve Fund has grown in membership and truly comes back to our members are part of the NADERF. And that's where as the title says, be a part. Your involvement in the North Dakota Insurance Reserve Fund is important in its continued operations. And it's not just, okay, we pay a premium / contribution to receive the coverage and receive our member coverage. But as we get into the services that are offered by NDRF and our member services, our loss control, the trainings that are available, that's where you can really mitigate the risk, mitigate the cost, and ultimately benefit everybody. So who are we? Our mission is to be the source for risk services for North Dakota political subdivisions. That means that when you think about political subs, how do we manage that risk? Call the NDRF. Call your agent, get on board with the NDRF. Liability coverage, this is broad-based. We'll get into a little bit more detail, but basically across the board is if you're hosting a board meeting and somebody's upset and they say that you did something incorrectly, or they present a lawsuit against your entity for allegedly a violation of the statute century code, we would respond to that to assist you in the court by retaining an attorney if it's a covered claim under that lawsuit, and assisting you work through that. The other side of it is if you have any operational exposure out there that results in damage or loss to somebody's property or injury outside of an auto accident, this is going to come into play. If you have a Facebook page and somebody's just being a pain in the butt and you block them on Facebook and now they sue you for a First Amendment civil rights violation, we respond to that. So it is across the board as to what we get involved in with providing that coverage. On the auto side, this is very similar to what most of our exposure is when we think about insurance. When we're driving around, we get the auto accident and there's a claim of injury or property damage. They're saying that it's your driver's fault. If there's damage to your vehicle, there's coverage for that. If there's damage to the other person's vehicle, we investigate to see what the liability situation is and take care of it on that end as well. And then public assets. This is basically anything. This is an inland marine policy where if you have a truck going out and it's full of tools and burns up, it might not be covered under the animal policy, but it would be covered under the inland marine policy as all those items are being transported around. If you have radios that are transporting around, is basically anything that's not covered in a single location or stays on premise all the time, because that would be covered under the North Dakota State Fire and Tornado Fund. Now this fund is a state program. It's run by the state, but we administer it on their behalf. I think there's 25 water user districts and irrigation districts that have property that are covered under the North Dakota Fire and Tornado Fund. So this is basically your homeowner's insurance, except for your buildings that you have out there. The biggest drawback for water is there's no coverage for pipes underground. So if there's a break somewhere and it's underground, there's no coverage for those pipes. If you have a pumping station and you have equipment in there that runs those pumps, those could potentially be covered under the State Fire and Tornado Fund. The rates from the Fire and Tornado Fund are extremely cheap. And this isn't related to any liability. This is purely the risk to your actual property. And next up, we have the State Bonding Fund, which is the fidelity insurance bond for public officials. And this is if you're managing funds, or your creditor ends up stealing a ton of money and gets convicted of stealing that, there would be coverage there to reimburse the entity for that. And then NDFIT, which is the health insurance side. We don't have a direct handling on this. This is something that we were proud to be a part of and forming, but basically providing another organization like NDRF for political subdivisions and their employees to provide health insurance. So our board of directors, there's a 9-member board. 3 of them come from the counties, 3 of them come from the cities, 1 of them from the schools, and then 2 others. Water districts fall under the others category. Right now we have 1 township officer in the others and 1 park district executive director in the other category. So our Our annual meeting is in May. The election notices will be going out here. If not this week, it looks like they only went out this week. So you should be receiving them if you are an adult member of how to be involved and get involved in those elections. So ultimately, if enough of the water users got together and said, "Hey, we want somebody on the board," you could certainly, uh, you know, put your votes in to make that happen. Management team. We had a new director of claims in August. That is Tony Burbank. He comes from the private sector with over 30 years of experience, 20, I think 26 of them in management. His job is to make sure that we're spending the money on claims when they should be paid out and defending the claims that shouldn't be paid out. We have Nora Freely, our CFO. Obviously, she tracks all the money. Lance Briggs, our CIO, he makes sure that all of our systems internally are talking to each other and keeping the bad actors out of the systems. Corey Olson, our Director of Member Services, you'll see him out doing trainings, doing liability surveys, looking at your buildings for evaluations. And then finally, we have Judith Kessler, Director of Underwriting, and he makes sure that we're bringing in enough money to cover, what's going on. So as of October 31st, what we're looking at is 39 million in members' equity. We have a net earnings of 8.5 million, losses of 35.4 million, and a 32.8% loss ratio. These numbers are somewhat skewed due to recent events in litigation across the state, mainly due to DAPL claims. Essentially, we've had very good success finally on the DAPL claims that came about because of the DAPL protests, where a bunch of the protesters in Borland are just going through the ACLU or similar entities said that what Morton County and any other law enforcement agency that was involved violated their rights in some form or another. We're talking. This was. Don't get into that. I guess I won't get too far into it. That one is somewhat near and dear to my heart as to how those all came about and have gone. But thankfully, we committed a ton of money into defending our entities on that, our police officers and our deputies that were out there, and making sure that they're not being uh, somewhat targeted by these big law firms out of California, Chicago, New York, that have the resources to come into North Dakota and basically try to run us over on that end. So a lot of that money that was committed into it wasn't actually needed in the end, which resulted in a reduction of reserves on those files, which then makes us have a better loss year because we don't actually need that money and it comes off the liability side, goes back into assets, into investments, and then just the general improvement of investments over the last couple of years. As everybody knows, 2022 was an awful year for investments. We held on to those investments, so we weren't selling them in a loss position. Now they've rebounded really really well. So the board of directors at the last meeting did decide to announce a conferment of benefits. So there will be a conferment of benefits payment going back to our entities in May. Which is right here. In total, since we started the program, it was voted into existence in 1995. We've returned over $75 million back to our members. And this, this is a result of everybody taking part in their risk management and what they do. So as I said, when we collect more premium/contributions than what is needed to pay out for losses and operating expenses, it goes back to the membership. The other side of it that we can utilize that money for is developing out better coverages for our members and taking on the additional risk that we might not have had before. One of those items that we're looking at expanding into a lot more is data breach, cybersecurity, responding to those types of claims. Right now, the data breach coverage is really limited in terms of just helping make sure that nothing was taken out of the system. that would require notification to people in terms of your PII has been potentially being stolen, and now your identity is at risk. Now, if you're all like me, you probably get a letter once a week, once a month that my information has been stolen. So I guess it's an open market on me in terms of that. So it's one of those issues that it's mandated by law, it's regulated, that we're making sure that we respond appropriately to data breach situations. So that's another avenue for where that money can go when more premium is collected. Our current membership, as I said, we've reached 2,600 members. We believe that's over 90% of all political subdivisions or people that or entities that qualify for coverage. There's no singular source of how many political subs are in North Dakota. You know, the cities say there's 337, I think. So, you know, we have a good number of those, obviously. But who exactly was dictated under Central Code by 26.1-23.1 and 32-12.1 as to who can take part in a government risk pool. Premium distribution, the other category is where water falls. We have 65 water districts and irrigation district members. Approximately 700,000 in premium is collected from those entities. On average, annually, we collect about $18 to $20 million in premium. So which makes, you know, the premium we collect from water districts 2.4% of that total amount. If you guys are bored at this point, just wait until now. We're going to talk about coverage. So coverage is very detailed and how it's written out. All of our coverage forms are listed on the website, so you can go to NDRF.com, take a look at our coverage forms. And basically, on the liability side, everything's covered unless it isn't. A bit of a nice number there. Yes, yeah, exactly. So if it isn't specifically said to not be covered in the coverage form, it's covered, which provides for some unique coverage situations because of how things can be presented by the plaintiff side. You can look at a water main break and or just a water line break and say, well, yep, it flooded my basement. There's damage. The entity is responsible for it. But they can also present that actually now you've trespassed on my property because you allowed that water to come onto my property. Or they might present an inverse condemnation claim saying, hey, you've taken my property from me and now you owe me because you took it as a public good by having that water enter my property. So each one of those has a different level of coverage based on the risk that is, you know, insurable by the membership. Inverse condemnation claims, there's coverage for defense, but no coverage to actually pay for whatever the court decides was taken. Trespass and negligence claims, there's coverage for defense, so for hiring an attorney, and for the damages that are decided by the court. So if it's sued out, which is usually the easiest way to determine coverage because a lot of times it isn't sued out when it comes in as a claim, it's just how that is reviewed and what could be anticipated as a potential claim against the political sub. So when I'm talking about coverage, every situation is different. Every claim has so many nuances and history and context. But when we look at coverage and it's a lawsuit, it is strictly what is in that lawsuit that determines the coverage as we compare it to the memorandums of coverage. That makes sense. So again, it's covered unless it isn't. Member qualifications, as I talked about, determined by century code, political subdivisions, and then public nonprofit corporations. So if it's a public nonprofit corporation that takes all of its income, or if it's solely fed by money from city, county, park district, school districts, or township, it could qualify for coverage under the North Dakota Insurance Reserve Fund. And that's where I say there's no singular source as to how many of those exist, because there are other nonprofit corporations out there that no one's really tracking, or they might not be sophisticated enough to understand that they actually qualify for coverage under the DERF. So who's the covered party? This language comes from the liability memorandum of coverage. It's you as the entity, and then it's your past, present employees, elected officials, or volunteers acting on your behalf. And then it's any commission, agency, board, district authority, or similar entity while acting on your behalf. However, an independent contractor is not a covered party. So there is language in the memorandum of coverage that talks about contracts, and what's covered in that regard is in terms of indemnification, those types of issues. But just as a, from a starting point, independent contractors are not covered parties. So if you have a contractor doing work on your behalf, completely independent, being paid, whether it's a handshake deal or under contract, they're not covered under the North Dakota Insurance Reserve Fund. They would have to go back to their own insurer. Some common terminology, because North Dakota Insurance Reserve Fund is not an insurer as a risk pool. We have additional covered parties versus additional insureds. If you are out on the private market and you need, to get coverage for that independent contractor, they would add them as an additional insured. However, they'd be an additional covered party under our memorandum of coverage. We do a confirmation of coverage versus certificate of insurance, memorandum of coverage versus a policy, and just as a basis, because everybody is a member, you are members and not insureds. Limited liability, we start at $2 million because of the tort cap under North Dakota Century Code. And as you can see on July 1 of 25, it increases up to 1.875 million per occurrence. So you can have multiple claimants, multiple plaintiffs, but they'd only be entitled under Century Code if it's a state law claim to $468,750 per person total, or per occurrence, that 1.875 million. There's claims that fall within that, as I just said, state law claims, which will be the typical negligence situations, whether it's an auto accident or a water break. But then on the flip side, I had mentioned the First Amendment claim that could potentially result from somebody being blocked on Facebook or whatever. That would fall outside the state tort cap. Now, we do offer excess limits up to $10 million after underwriting review to make sure that the risk is okay for that, because there's an additional layer of reinsurance that comes into effect then. It's ultimately up to, similar to our own personal risk of what we have for our own insurance, how much liability coverage you want to carry for the entity. As there is a state tort cap, like I said, federal law claims, any civil rights violations that are out there would not, be defined or be subject to that tort cap. Our memorandum of coverage, some of the benefits that we have, our defense limits, that doesn't fall within that $2 million limit of coverage. There's no annual aggregate limit. So if you had 4 $2 million claims in a year and they were truly worth $2 million, they'd be paid out, so you'd have $8 million within that policy year. There's, there's policies out there that basically it's a $2 million aggregate limit. So all you get is that $2 million. So even if you have, 6 $500,000 claims, you're going to be out $1 million on your own, even though none of those claims were individually 2 million, but you only get 2 million for them to pay out in a year for indemnification. The defense costs are paid in addition to the limited liability, and what I'm talking about there is if you get sued and we hire an attorney, your $2 million is not being eroded by the expense of that attorney. There is also a $100,000 limit for injunctive relief claims, which means any declaratory relief or injunctive relief, a declaratory action or injunctive relief is limited to that 100,000. It's basically saying that, well, the board should have done this, can, can you force them to do this? And or enforce a contract that's out there by saying, well, they're violating the contract. We just want you to enforce or make a declaration about what the contract says to the court. Those are limited to $100,000 in coverage, and that includes the defense costs as well as any damages that might be awarded to the other party. There's liquid liability out there if you like to host parties at your facilities annually for Christmas or for your meeting. Somebody gets a bit too loaded up and drives and injures somebody. There is event coverage for that. Just that dram shop liability out there. And then employment practices liability if you have some disputes with your employees and they're making allegations of harassment, discrimination, that is covered as well. Employee benefits liability. This is, the most common one we see is when somebody's let go and they need to be offered the COBRA coverage and that gets missed and somehow they, as Murphy's Law is, if it can happen, it will happen. They had a surgery lined up and they have the surgery thinking that it would be covered under the death and birth coverage, but it isn't. Well, there's the liability on the entity that's covered under the policy, under the memorandum of coverage. That special event coverage, if you're hosting, water district user day or whatever, and there's a special event and a kid gets injured on the bouncy house, there'd be coverage available for that. And then $250,000 coverage for sudden accidental pollution liability. The biggest one we see with this is, ultimately with the cities and sewer backups happening. If there's an issue with the sewage treatment plant and it causes an issue and it's a release of pollutants out, that would be subject to that 250,000. And then medical payment coverage. Somebody's on your property and they get injured and there's no liability, there would be medical payment coverage to help them cover the costs of their medical bills that aren't covered by their health insurer. And there's some exclusions that come along with that. Some of the biggest ones we get are the parking lot claims when somebody's walking out in the parking lot in the middle of winter, and of course they slip and fall and get hurt. Well, if you've been plowing and removing the snow in the parking lot and you have a nice windy day, of course there's going to be that nice glaze of ice that happened. That's in North Dakota and case law is just one of those things you have to be cognizant of. Comparative fault will come into play. Typically there's no liability there. But then in that situation as well, there wouldn't be any medical payment coverage just because it's a risk that basically all North Dakotans take on just by living in North Dakota. Auto coverage, no deductible for glass repair. So if you're out, you got your pickups out, vehicles out, and you're getting a bunch of chips and they need to be repaired, there's no deductible that would apply to it. So you can go in, you get 5-6 chips repaired and it's, $400. Your deductible would not apply to that. The windshield need to be replaced, deductible would apply. So then the reasoning for that, just in terms of grand scale numbers, is if you're taking care of those chips right away and getting them filled and it costs $65, it's going to be a lot cheaper in the long run for that, both the entity and the insurer, to make sure that we're not having to replace now $1,000 windshields if you're just getting a $65 one. So that's where you can be a part in making sure that those pickups and cars are getting those windshields fixed versus replaced. Towing, no deductible for towing. If your vehicle breaks down, it needs to be towed to the nearest body shop, or excuse me, place of repair. There's no deductible for that. This doesn't include locking your keys out or locking yourself out or locking the keys in the pickup. I don't know if that even happens anymore with all the electronics that are out there, but maybe it can. But there wouldn't be coverage for that to call a locksmith to come out and help you. And rental reimbursement on auto claims and stated amount coverage. If you have some specialty equipment that might qualify for stated amount coverage. The biggest one here is firefighting vehicles and ambulances. I'm not sure what you guys would have, but it could potentially be there. And what this allows for, fire protection, perfect example, because as I've been hearing, is the fire trucks they only 3 years ago for $1.8 million are now $3 million, and they've been waiting 3 years to get those trucks just as it was. So just in that 3 years, it has gone up that much. So what that allows for the entity to do is say, hey, we only paid $1.8 million for this fire truck, but to replace it right now would be $3 million. That allows them to put on $3 million coverage in the event of a total loss. They get the $3 million versus 1.8 or whatever the market value of that vehicle was at that time. And then public assets, blanket option. Like I said, if you have a bunch of tools that are out in the back, you just want to have them covered under a blanket versus individually listing every single wrench, socket, screwdriver. You get the blanket coverage option on it. And then going debris removal, that goes into some of that bigger equipment and rental reimbursement. All right, partnerships. So we try to partner with our member associations. This is one of them. We're out here trying to inform you of everything that NDERF offers. You might not be taking the advantage of everything, but it goes into the training as well. If you are involved with NDL, those types of organizations, that is something that we partner with as the best way to reduce claims is to reduce the risk. HR Collaborative. How many of you have employees? Yeah. Okay. In the military, whenever they're doing a training and there was like an answer to a test coming up, they would go. So, HR Collab at ndif.com is a way for you to get help. If you're having issues with employees and it's developing into something, or you feel like you might be over your head on it, or your HR manager's having a hard time with it, email hrcollab@ndurf.com for assistance on it. And if it's sometimes we take off, we bite more than we can chew sometimes, and it might be past the point of the assistance that we can offer, we can say, you need to consult with an attorney. And that way it's addressed on the front end versus having to deal with it on a claim. Employment law claims are just absolutely awful for everybody. Nobody wins. Not even the attorneys that are representing the parties. They don't win in that situation either. So the best way is to prevent it. hrcollab@ndurf.com. I might have just saved one claim and that'd be worth it if it did. Member services, we provide a lot of free online self-paced, that sounds funny, self-paced trainings in terms of just all across the board topics. For Local GovU is our online training platform. If you want to have your administrative assistants take training on how to greet people on the telephone, it's one of the trainings. If you want to have your HR person work on conflict resolution, that's one of the trainings. If you need help just generally for governmental risk, if you need help on chainsaw operation, it's one of the trainings. So check it out, get signed up. You can go to our website, member services, and go to the online training, get signed up for that platform. It allows for a single person within the organization to assign trainings to people. It's a great resource. Best part of it, it's free. Second part is defensive driving courses. There's a separate section under member services tab on our website for defensive driving. Defensive driving, everybody loves it because we get the discount on our auto insurance. This is that type of training. Sign up for it, utilize it, get your drivers that are out there out and about using it. So that's a big part of it. Property surveys, as you can see, Corey. Oh, I'm on the wrong slide still. Sorry about that. Corey Olson down there, he'll come out, or Terry Wingenbach will come out and help you evaluate your buildings. This makes sure that they're covered properly under the Fire and Tornado Fund. But here again, if you're a part of this, you're helping reduce the overall cost of the Fire and Tornado Fund, because one of the things that the reinsurers look at is how well is the fund run? Because if there's a bunch of properties on there that are not valued properly, what you're ended up doing is there's more risk out there than what you're accounting for. So when we're talking $250 million of potential coverage from the reinsurers, they want to make sure that the premium is being collected and appropriately being accounted for. So making sure that your buildings are up to date on the valuations is not only by state law, but just generally as a business practice is always good to do. And then of course you'll see us out at these conferences. If any of you are part of, uh, volunteer firefighter or anything else that you're involved in, you might be on the park district board. What I've noticed is a lot of our members are involved in just so many different things, which is great. It's that mentality of service that I truly love about our members. Our communication, we send out a quarterly newsletter called the Participator for NDRF operations. You'll find stuff regarding human resources issues in there, news articles on I think the last one we talked about service dog liability, what you can and can't do for service dogs when people bring them onto your premise, ordinances, those types of issues. So it's across the board, and we try to obviously try to target it for the season and what we're seeing for our losses. But it's just a great resource to have. Keep those on hand. There's been a number of times where somebody sends in just a quick comment, just saying, "Hey, I looked at your participation from 2014. You had a great article in there. It definitely helped us in a situation." So keep them on hand. Take a look at them from time to time. Obviously, everybody's busy. It's hard to do that, but and then the communicator. If you are involved with the Fire and Tornado Fund, the communicator helps provide some tips on that too. This one going out now is going to talk about freezing claims with freezing pipes and buildings. And it's some of those losses are just I don't know what the word would be the best word. They're just it's kind of that could have been prevented. Like it just they're very easy to prevent. It's a slip of the mind. We're all busy. I cut somebody off in the parking lot this morning because I was thinking about something else. These things happen. I made sure to go walk over to him and apologize. He said, "Hey, no problem." But with a loss, it's not that easy. You're dealing with typically months of repair and wait times on it. It's better to just address it up front. Take that extra 20 minutes, walk around the building, check it out, make sure everything's sealed up, it's heated, all that good stuff. Upcoming projects, we are expanding our staff to help with the loss control initiatives that we have. Every dollar, there's it's hard to measure losses that don't happen. Obviously, it's that black hole that's out there for losses. But I'm a true believer in risk management, and that any dollar invested in loss control is going to pay off 2 to 3 times that amount just by preventing that loss. So getting people out there to help with the liability surveys, make sure that things are being identified up front and taken care of. Obviously important. Improve communication. One of the big things that we've been doing is really pushing the communication out through the participator, expanding the options on that, doing a member recognition, and making sure that everybody is a part of it. It is your program. The cost that goes to the membership is a result of those losses. And the best way to reduce that is to reduce those losses, and making sure that you're a part of that communication is important. And in 2025, we'll be moving to a new building, which is just north of the Capitol here in Bismarck, called the Manhattan Building. It's the building with the white columns. It's a very unique building, but that's where we'll be. And if you've ever been to our building now, it's going to move for us to be moving over there. A strategic plan. So every 3 years we develop a strategic plan. It doesn't change a whole lot just because of those things that we identify. One of the biggest ones being the education component. We've had just a tremendous amount of turnover within our membership over the last 10 years across the board in terms of there's a lot of people that don't recognize what happened in the 1980s and why the NDRF exists and why they're members of it, or even the services that we offer for trainings, loss control, all of that. So the communication aspect of all the great things that we do is a huge part of it. And just improving our operations. I am a huge believer that every organization can improve, and that is something that we're just constantly working on. Uh, sometimes it's a little by little, sometimes it's a huge leap. Sometimes you you're looking at everything and you think you're going in the right direction, and sometimes you got to redirect. So Our strategic plan gives us that direction as to where we're going and how we're doing it. And every 3 years we update it and make sure that, you know, with our member surveys that we send out every few years, we're making sure that everything's being accounted for and taken care of. So finally, that's it's your story. You're members of NADERF, and as I said, this upcoming election here, you know, it's you have you have you have an opportunity to, you know, if you want representation on the board, you want to be involved, it's certainly the time to do that. And if you see something good happening out there, if you see another member, you know, doing something great, or if there's something that you think should be modeled across the board and would help with the operational risk of our members, let us know. My door is open to our employees. It's open to our members. If you want to come in and talk to me about something, I am more than happy to talk about it. There's a lot of context that's required sometimes, but it's definitely for you. And there's a nice picture of me. If you have any questions, feel free to give me a call. As I said, I'm open to discussion. If there's something you feel we can do better, I'm open for it. So thank you. Any questions? Oh,
You guys pay out any claims for that protests, or was it just Dwyer?
I think it was all just lawyer fees. I think there was one claim. I was like, well, maybe we should pay this one, and it got dismissed under summary judgment. So no.
One question. Honor indemnification clauses.
Depends on. Yes, we will. There's always a depends on it. It's kind of that attorney answer, I guess, too. I'm not an attorney, but you know, it's yes, but it depends. Anything else? All right. Well, thanks again. I hope you all have a great day.